All right, good morning. Now we got some sound, Gary. You got me coming through live and, what do they say? Loud and clear, not live and clear. Good morning, everybody. Nice to see you people posting up first thing in the morning. Hopefully that market's a little more forgiving than it was yesterday. Guys, give me a Y in the room if you can hear me. I always worry in the very beginning. Cool. Thanks, guys. Nice to see you guys here, too. Hope everybody's doing well today. We've got sunshine forecasted here, so I'm about as happy as a clam, guys. I am clam happy at this point. Ready to get into the day. Pretty excited about it. I think there was a lot of great lessons yesterday. Most of it was on patience, right? Yesterday there was a lot of stuff going on, and not a ton of rules met for a lot of people, which is okay. There's going to be days like that, right? There's going to be days where the market doesn't want to give it up, where the market doesn't want to, sounds like a recipe, where your rules just aren't met. And I think that really it's the market giving us a valuable lesson that there's only two scenarios when you talk about getting into the market. It's because your rules are met, because you have a plan that's put in place, you have a set of rules that's been proven through back testing, through study, through repetition to win more than it loses. And then those advantages are present, so you enter the market. Or the other option is the rules aren't met. You don't have a clear advantage. You don't have something going on that's been proven over time to produce more winners than losers, in which case you make the choice to sit on your hands. And I would say if I had to, I don't know, rate the learning process here, um, learning the rules is not a difficult task. Um, recognizing momentum is easy. Identifying termination conditions will become second nature within a week. Pinpointing the perfect high probability entries, you are rock solid by the end of week 2. Most people are. And then the challenge comes, can you do nothing? Can you do absolutely nothing when your rules aren't met? And that really is the challenge for a lot of people. And today I started the room. I called it, if you think you can, if you think you can't, you're right. So go into it with the attitude that if it's not happening, if my rules aren't met, I'm just going to sit on my hands, right? I'm going to sit on my hands. I'm going to wait. And I'm going to give myself the best chance of success because this isn't something that I'm doing just for chuckles on a Tuesday. This is going to replace my job. This is going to be my income. This is going to be the way I make a living, guys. This is a job. And if you are a surgeon, you're not going to remove a gallbladder just because you're bored during an appendicitis surgery, right? I don't know. Bad analogy. Anyway, let's get going. I'm excited to jump in. But isn't that kind of true, Sophia? If you're a dentist, you're not pulling extra teeth because you wish there was more to do, right? If you're a garbage man, you're not knocking on people's doors going, hey, I know you put the can out front, but is there anything else in here I can do? So why do we feel so compelled to do it here? Let's get the day going with news. Today is Tuesday, April 25th. Each and every day we're checking news, right? Making sure that there's not some craziness going on. At 9 a.m., which just happened, a little low impact. I don't know if it had an effect on the market or not. But at 10 a.m., we've got CB Consumer Confidence, new home sales, Richmond Manufacturing Index. One high impact, that red box, two medium impacts. Guys, these have the potential to be market movers. These have the potential to make things jump, spike, bounce, whip, nay, all those things that the market does that make it a little unpredictable and difficult to trade. So write a note, have Siri give you a reminder, whatever you need to do. This will be right about the time we take a first break. So usually 2 or 3 people in the room go, hey, Mark, news in 5 minutes. But each and every morning, I'm making sure that I understand that there is news coming, and I'm looking for it, and I'm aware. And my choice is to sit on my hands when it's high and medium impact. You may make a different choice. And then everything that we're talking about, guys, is coming from the tutorial section right here, right off the education page. And I'm going to run through what we're going to look at. I did it a little quicker yesterday, and we found ourselves with a lot of free time. So I'm going to slow it down, probably. We're just going to have a good time today. Let's make this interactive, guys. Talk lots. Ask a lot of questions. Raise your hand all the time and say, hey, Mark, talk about this, talk about that, talk about these. But the first thing that we're going to talk about is a high probability trade. We're going to talk about a trade that every indicator on every chart agrees for the trade, right? Typically, this is when your triggers are the strongest, and we'll talk about recognizing that strength. We'll make sure no termination conditions exist. And you're going to be able to identify termination conditions to make sure that they don't exist and that there's no trouble spots between you and your entry area, or your entry area and your target. And guys, this is a high probability trade. This is what we focus on for the first 30 minutes because it creates a scenario through recognizing and following the rules that allows you to become a chart reader. And if you've been with me more than 30 days, I think you probably see the value in being a chart reader at this point, because 90% of what we do is reading our charts. 10% is trading. 10% is recognizing the advantages because of our chart reading and then entering a trade. Your chart reading mastery, love that word mastery, it just feels good, right? Is going to incorporate 3 essential elements. Understanding where the market is likely to continue, then using that point for entries for that high probability trend trade. Understanding where the market is likely to go and using that for intelligent targets, using Fibonacci, using momentum, and then where the market is likely to stop. And that's that termination condition again, those areas where the trend may end. You're going to be able to open up your charts and discern all these 3 things really within a matter of seconds. If you focus and keep it simple in the first 30 days, focusing on the trend trade, the 5-1 trend trade, the small chart trend trade that happens after a termination condition on the 13-2 chart. Guys, this is your best chance of success in the beginning for the first 20 trading days. Just focus on this. It's going to teach you to be a chart reader. It's going to teach you to recognize advantages. But more importantly, is it's going to give you a trade that's been proven to win more than it loses. It typically wins 70 to 80% of the time. And it's going to give you a trade to take while you grow with the software, while you begin to recognize patterns, and while you work yourself into what we call a medium probability trade. And this is good news for you adrenaline junkies. A medium probability trade is defined when most of your indicators line up for a trade, however a small issue exists. Your chart reading is going to identify that issue, and it's going to allow you to weigh out advantages versus that issue to see if you want to be in that trade. This will be the vast majority of your trades. You'll find yourself taking trades with a small issue. And when you execute these, you're going to take these trades and manage them assertively. Once again, your chart reading is going to allow you to manage them assertively. You're going to recognize change in the market on these medium probability trades that has you perhaps taking quick profits at trouble spots, getting to zero risk, and putting yourself in a position where even though everything isn't in your favor, there's still the opportunity to make money, even if it isn't the home run that you're looking for. So we're going to start high probability. We're going to work our way into medium probability. And we're going to keep it simple. The name of this picture is Rules Simple. Only 3 rules. People love to complicate this. We're gonna use the KISS method today, the keep it simple, silly method. We're going to look for 3 rules, and these 3 rules are going to create 3 very distinct advantages. And these 3 advantages, when you put them together, are the recipe for a trade. A trade is nothing more than momentum, a clear path, and an entry area. So each of the 3 rules that we talk about is going to give you one of these advantages. So when you have them all, you have a high probability trend trade. And when you choose to forfeit one of these, well, then you've put yourself in a medium probability scenario. And it doesn't mean that it's a bad trade. It just means that you have to manage it a bit more assertively. These three rules are going to come about on only two charts, guys. We're not going to cloud it up. We're going to keep it simple. You're going to use a 13-2 chart, the most current bar, one bar event, to determine the trend of the market. You're going to look at that most current bar, and you're going to say, my background is green, therefore I'm in an uptrend, and I'm only looking for rules to be met for high probability trend trades long, trading with the trend. If you look at that most current bar and the background is red, well, you're in a downtrend, and you should only be looking for rules to be met for high probability trend trades short. One of the biggest advantages I think you can give yourself, especially as a new user, is just trade with the trend. The trend is your friend, and all those other cliches that go with it. Next, your first two advantages come from the 13-2 chart. Rule number one is strong trigger lines, and it's going to give you the advantage of momentum. Rule number two is no termination conditions. It's going to give you the advantage of a clear path. You are 2/3 of the way to a high probability trend trade before you ever look right. The 13-2 is a broad stroke of a brush. It is giving you the overall look of the market, the temperature of the market, whatever you want to call it. And when these rules are true, then and only then do you turn your attention to the 5-1. And your 5-1 is your entry chart. And on this entry chart, you're going to refine that broad stroke of a brush provided by the 13-2. You're going to pinpoint your area of entry, that spot where the market is likely to continue. Once again, it all goes back to chart reading. And this is where rule number three gets executed. And using a limit order to buy or sell a pullback at an area inside of favorable large triggers. And this gives you the advantage of an entry area at the point where the market is likely to continue. And by doing so, it's going to let you reduce your risk, and it's going to maximize your profit potential. New users are eager to add charts because they see other people adding charts. New users are going to be eager to add trades because they see other style trades. And the reality is branching outside of two charts is easy to do when you learn to read your two charts. Branching outside of two charts is easy to do when you understand the advantages provided by only two. And then adding trades, should you feel you need them, becomes very easy to do with the ability to understand the advantages that your chart reading provides. So keeping it simple in the beginning so that you can grow with the software is really a great plan. And those three rules that we're going to talk about, those three advantages, are lined out right here in the education section. And all we're doing today is we're building a solid foundation. We are going to create this base knowledge that's going to take us on to the next level. And everything starts with the trigger lines. You're going to determine trend with the trigger lines. When your small triggers, these solid lines, these faster moving triggers, break above the large triggers, they cross above, that background paints green, letting you know that you are in an uptrend, that you're only looking for rules to be met for high probability trend trades long. When those small trigger lines break below the large triggers, notice that it turns red. Once again, that visual cue. Hey, only looking for rules to be met for high probability trend trades short. And even though your large triggers may be red sometimes, you may see that green trigger come up. The background color will remain green. And it doesn't mean that the rules are met yet, but it does mean that you're only looking to trade with that trend. So, going to determine the trend, commit to trading with it, and then rule number one says that we have to have strong triggers. You have to have the advantage of momentum to really begin looking for anything else. The advantage of momentum comes from those strong triggers, and strong triggers look exactly like this. Small trigger lines are crossed up. They're above the large triggers, which are also crossed up. They're going the same direction. It's the space between the large and small, that gap between the two, like scissors that are wide open, ready to cut. It lets you know that the odds are favorable for the market to continue in the direction of the trend. You're going to hear that phrase in class a lot, odds favorable momentum. Did you have odds favorable momentum? Because if you did, the market's likely to continue. In a downtrend, it's the same look. Small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. That gap between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. Guys, this is your first advantage. One of three in the recipe for a trade. And if you find yourself committing to this momentum, it really makes your job a lot easier, because when the small triggers return to and they break inside of those large trigger lines, it's what we call really an anything can happen look. Anything can happen up or down. The market may go up, the market may go down, the market may reverse. We don't have the momentum pushing it in the direction of the trend. So I made this picture for new users. This is a great way to be able to go back and just kind of recognize the looks right in the moment. Small triggers inside of the large triggers, anything can happen. Notice that it slows down and changes direction, provides odds favorable momentum, and continues in the direction of the trend. Guys, this bar right here, your one bar on the 13.2, you're going to see these tails from time to time with that odds favorable momentum. Right at the base of that tail is a potential entry on the 5-1 chart, on that entry chart. The trigger lines weaken and you can see the market turns again, provides odds favorable momentum. Once again, there's a tail. And then they kind of go sideways. They don't agree. The smalls go above the large are down, the small are up. It's these moments of indecision when things don't line up. This is where new users are going to try to predict what the market is going to do rather than waiting for the momentum. But if you let these things settle out, ultimately, you end up with that odds favorable momentum once again. So it's a very distinct advantage. It becomes very easy to recognize. You can see those tails over here on my 13.2, potential entries on the 13.2, and I just lost my NinjaTrader 8, but that's okay. We're going to talk rules for a little bit. Let me get this thing restarted. I apologize, guys. All right, here we go. Is everybody comfortable? Rule number one, the advantage isn't there from start to finish, right? The advantage is there from when they break away until they return. Ultimately, we're going to use these tails to study, to go back and look at opportunities in the market. But once we have the advantage of momentum, guys, you have to make sure that you have a clear path. You have to make sure that there's absolutely nothing in your way. Nothing to stop that trend with all that momentum. And that comes with termination conditions. The termination conditions are nothing more than an area that may reverse the market. It may stop the trend. It may create a reaction big enough to pull you out of a fantastic trade. In the areas that we're going to recognize, only 27 in here today. We're going to look for these divergence highs. Divergence high means that a pivot was created. The market went up and then down. And when price pushed all the way up to that 79.46 level, it was losing momentum. So divergence becomes a visual indicator that momentum is going away. The market pushes down and back up. This cyan line lets you know that the market is losing momentum. This is where the sellers had control and the buyers stopped them cold. So we're going to recognize divergence lines, highs and lows. Magenta and cyan is an area that may reverse the market. You're also going to be able to identify red resistance, blue support, yellow one-to-ones. These are the areas that we're going to use. And then the mid-band, if these large triggers, these slow-moving triggers, simply don't follow along. And we're going to talk about examples of each. But this really becomes nothing more than a simple process, a two-part process to determine whether or not an area is broken or whether or not you have the advantage of a clear path. And this picture is going to sum that up for you. On the left side of the screen, you're going to see price reaches an area, meaning those price bars come in contact with resistance here. Not one of your T3 trigger lines, not the small nor the large, make it through the area. This becomes an area that has the potential to reverse the market. The advantage of a clear path has gone away. You no longer have the recipe for a high probability trend trade. The rules tell you to wait for the area to break, and the area is broken when both the small and the large get to the other side of that area of resistance. You'll see that resistance begins to act as support. There's one of those tails on the 13-2. This is your clear path. So as you're studying the high probability trend trade, this is your best of the best look. Not only do you have momentum, but the path is clear. Focusing on either having that path or not having that path is going to lead you to your first medium probability trade. Remember, I told you that your ability to read charts is going to open up doors for more trades. And that first trade that you may take is what we call a 50-50 trade. And you're going to hear that in the class. You're going to see that on people's charts. And what a 50-50 trade means is that 50% of your trigger lines have broken through the area, 50% of your trigger lines have not. This is an area with that odds favorable momentum that has the potential to break. But because it hasn't yet broken, because both small and large haven't gotten to the other side, it is not a clear path. Rule number 2 hasn't been met. So pretty simple in the beginning. It's either broken or it's not. And then as you grow with the software, when you learn to manage assertively, you'll find yourself taking these trades with the potential to break. And I'm pretty sure I have a couple great pictures of that in the room already. But price reaches area, absolutely no trigger lines break through. We're not taking trades into support. Guys, if you're brand new with me, maybe trading in determination conditions is your problem area. It was mine. Give me a Y in the room. Let me know that you're with me. Price reaches resistance. Absolutely no trigger lines break through. There's no reason to try and go long into an area that may reverse a market. Price pulls all the way back to support, right? All the way back to that mid-band area. No trigger lines break through, guys. There's no reason to hope. Sit on your hands. 90% of what you do is going to be reading indicators. 90% of what you do is chart reading, waiting for those advantages to be present. One thing I want to point out here is price accelerates away from these large triggers, comes all the way back to an area. If there's room for a full reversal bar on your 13-2 before it comes in contact with those triggers, whatever area you've hit down here, you certainly do not want to trade into. This just kind of confirms that that moving average isn't following along. Ultimately, price comes back up to resistance, to that divergence high and a second resistance. This is what we call a pivot stop out of a divergence high. Here's your pivot with the loss of momentum. Price goes above, comes back below. The trigger lines can't break it. Don't take any more long trades. And if the Fibonacci resistance holds as well, well, then this is what we call a strong top, guys. This is a termination condition that creates a full reversal that gives you odds favorable momentum. That's your best of the best, and that's the anchor for that highest probability trend trade, right? Trend trades that happen after a termination condition on the 13-2. You'll also see pivot stop outs of divergence lows. Price comes down, the smalls break through, the large are trying to break through, and that pivot forms. Because there's a loss of momentum, that cyan line begins printing to the right. This is not a termination condition. The triggers are broken through support, right? But when it pulls all the way up to the midband, those large triggers don't follow. It snaps right back, and it retests that area. Price trades below that divergence low and back above. Now we have a termination condition. Now we have a pivot stop out of that prior divergence line. Now this termination condition provides us a full reversal. The chart goes from red to green. The large triggers go from red to green, and those small triggers break above the large. This is what we call a strong bottom. This is your anchor for the highest probability trend trade. Even with odds favorable momentum, the small can be outside of the large. That market can be screaming in the direction of the trade. Price reaches one-to-ones, absolutely no trigger lines break through. Because they haven't, no more short trades. Look at the reaction to the area. This is what we're trying to avoid, guys. By not having a clear path, you may get caught in a bounce. Ultimately, this termination condition gives us a full reversal, gives us odds favorable, gives us a clear path, and there's one of those tails for that highest probability trend trade. This is the best of the best. Over here, this is that first medium probability trade. Small's above the large are wide, they're angled in the direction of the trend. Rule number 1 has been met. The small triggers are below, the large triggers are below, the small triggers are above. There's one of those tails. This may be a fantastic trade. It's a medium probability trade because the support has the potential to break, but it hasn't yet. And the market heads up. So both are valid trades. One is high probability, one is medium probability. And then sometimes that market's going to turn, guys. You're going to have a clear path. Sometimes you may even have odds favorable momentum, and it's going to seem like it just turns from nowhere. This final termination condition is going to be your visual, letting you identify this change on a smaller, faster chart rather than the 13.2. And this is the only termination condition that I'm looking for on a 5-1. And that's 3 divergences in the same price range may terminate the trend. That in itself is a termination condition. 3 divergences in the same price range lets me know the trend may end. It becomes very powerful when the third divergence happens with the small triggers inside of the large triggers. Remember, your chart reading is going to work on any chart. Your ability to identify momentum through trigger lines, smalls outside, smalls inside, is going to happen on every chart. You're going to use it on the 5-1 to see change faster than you'll see it on the 13.2. So 3 divergences may reverse it. 3 divergences with anything can happen triggers becomes more powerful. And then this termination condition on the 5-1 becomes more powerful still when that third pivot is higher than the previous, when price can't exceed the previous pivot and momentum is lost. So guys, this is the look from a low, this is the look from a high that you're going to see when that market appears to be turning from nowhere. It's going to give you the visual to help keep you safe. And if we're looking at the S&P from this morning, one divergence, 2 divergence, 3 divergence, and it ultimately pushes that market lower, even with odds favorable, even with things working their way up. So recognizing this pattern becomes a management opportunity. If you are in the market and you begin to visualize this slowdown, you see these 3 divergences, you can get out of the market at a 0 loss, protect your profits, and it puts you in a position to keep the powder dry, if you will. So is everybody comfortable with termination conditions? Guys, you're going to practice this. You're going to go back and you're going to open up a larger chart and you're going to say, let's just look. There's a pivot stop out, but the triggers broke through. But we know that things can happen here. Resistance, no trigger lines break, good termination. Resistance, no trigger lines break. Look how the market reacts. And look at all of these tails, all of these potential entries with that odds favorable momentum. Sometimes areas overrun. Sometimes they hold to the tick. But you can use that combination of trigger lines as well as areas to give you the advantage of a clear path. And once you have that clear path, right, you've already got momentum as identified by the trigger lines. You've already got a cleared path as determined by the comparison between the trigger lines and the areas. So let's pinpoint where the market is likely to continue. Rule number 3. Excuse me. Rule number 3 says that I'm going to use a limit order. If you're not familiar with limit orders, what a limit order means is that you're literally going to wait for the market. You are going to place an order at a price, and you're going to demand that the market comes to you. And you're going to put that limit order at an area. And areas that trend trades originate from can be fibs, resistance, or support. It can be a mid-band, green for longs, magenta for shorts, or it can be those yellow 1-to-1s. So you're going to have a limit order waiting at an area, and those areas are going to be inside of favorable large triggers. So you're going to learn to look at your large triggers almost like they're, I don't know, they're a suitcase for your areas. And favorable large triggers means that your large and your synthetic are trending one on top of the other. They're overlapping. And what this is going to do for you when you pinpoint that area where the market is likely to continue, it's going to give you a tiny little window of opportunity, a very small spot where the market is likely to bounce. But we've got to be able to determine, you've got to be able to understand where that market is most likely to continue. And when your rules are met on the 13.2, this is the look on your 5.1. We're in an uptrend. The 5.1 has strong trigger lines. Smalls are well above the large. Even on your 5.1 chart, the odds are favorable for the market to continue. Nothing but green up bars. Large triggers are wide, they're angled up, one on top of the other. And all you're going to do right now, because your rules are met on the 13.2, you're making the decision that it's time to take a trade. You're identifying mid-band, fibs, 1-to-1s. And you're saying to yourself, this is where this market is likely to continue, but I need to create a window of opportunity. I need to know exactly where it's most likely to continue. So you're going to wait for a reversal bar. And that reversal bar is going to signal the beginning of a pullback. And all a pullback is a small retracement in price that's counter to the underlying trend. I think I'm going to buy a new computer this weekend. It's a small pullback in price that's counter to the underlying trend. So what we're doing with this two chart scenario is we're letting the 13.2 lead the way. We're letting the 13.2 establish momentum. We're letting the 13.2 let us know that the path is clear. And this is a reflection. This is the large chart. This is the large crowd opinions of the market. And when they tell us it's time to look for an opportunity, we're going to root for the small crowd. We're going to root for these couple guys to fight the trend, to fight momentum. All those things that we don't do as new users, we want them to do. And we're going to see it start with this reversal bar. At the time of the reversal bar, your job is to look from the highest point of your trigger lines to the lowest point of your trigger lines. And the areas that fall inside become your window of opportunity. For a long trade, you're looking for the highest point of support. And now Discord's kicking me out. Man. I know you guys can still hear me. I'll be back in just 1 second. All right, let's get that screen back up. Entries are important, right? Man, you got to be able to see this. Here we go. Everybody good? It happens. From the highest point of support to the lowest point of support inside of favorable large triggers, guys, this becomes the area where the market is likely to continue. If you are looking for short trades, it's the exact same, but opposite. It is from your lowest point of resistance inside of favorable large triggers to your highest point of resistance inside of favorable large triggers. Your job is to right-click on that chart and activate a limit order. Buy limit 2 right there at 79.20, 79.21, a tick or two above that highest point of support, and then your job is over for the moment. Now it's completely up to the market. If that small crowd decides to push hard enough and gets you back to that window, that highest point of support inside of favorable large triggers, you're in a long position. You've just bought the market. The market came to you. Your initial stop will go below that window of opportunity where the market shouldn't go. I used to not like that phrase, where the market shouldn't go, because it assumed that I knew where the market shouldn't go. The market shouldn't go beyond that window, beyond that lowest point of support. And if it does, then you no longer have the advantage of an entry area where it's likely to continue, which means it's okay to exit the trade and wait for the next trade. But this entry has the advantage of momentum on a larger chart. It has the advantage of a clear path. It also has the advantage of having entered the market where it's most likely to continue inside of that window of opportunity. And guys, this is a trade that I'll take 1,000 out of 1,000 times without hesitation, because 70 to 80% of the time, this is my result. 70 to 80% of the time, it's target reached because of the advantages that are present, because of the entry. Once it moves in the direction of my trade, I can minimize my risk. You'll find yourself in trend trades with 2 to 3 ticks of risk sometimes. Your profit potential is increased because you waited for the pullback to the area. And guys, this is your best of the best. This is your first 30 days. And your job for the first 30 days with Nexgen is twofold. You're going to take as many pictures as you can. You're going to take pictures of every potential entry you see. Is everybody comfortable with their TechSmith cap share? Marshall Money, I know that you're relatively new. Are you okay with TechSmith? Can you take a picture, guys? Because this is how you and I have a conversation. Awesome. You're going to take a picture every time you have rules met on the 13.2. Strong triggers, no termination conditions. And there's that magical tail, right? Guys, you're not trading tails. What you're trading is areas inside of favorable large triggers on the 5-1. If I circle this tail on my 13.2 and it lines up on the 5-1, I know that I have a rules-based trade. My job is to use that capture software, take a picture. Remember, this is after the fact, right? All I'm doing is I'm burning this image in my head. The most important thing that you can do is use this call out button and write your rules on the chart. I had odds favorable momentum. I had no termination conditions. And I had an entry at an area inside of favorable large triggers. Guys, if you get in the habit of writing this out each and every time you take a trade, what you're doing is you're reinforcing the looks, right? You're reinforcing the verbiage that creates the advantages. You're verifying and validating that you do, in fact, have a high probability trend trade. I'm going to upload this to screencasts. I'm going to put it in that cloud. And then the most important thing that you can do with that picture, first and foremost, like you see these guys doing this morning, get it into the room. Post that picture. Let's have a conversation. I'm here 15 hours every week to give you feedback on anything and everything that you do. And the next thing you're going to do is you're just going to open up that spreadsheet that was provided by Nexgen. And if it's a rules-based trade, put it in your favorite looks. Create a hyperlink, right? And just call it rules met, high probability trend trade long. And you're going to go back and you're going to study each and every one of these guys. You're going to create a database, this mental image of your best of the best entry. And you're going to get so comfortable with it that it's going to become easy. And it's going to become so easy that you're never going to miss it when it sets up in the market. But you have to study just a little bit to get it. So if I'm coming through and I'm scrolling back, reload the historical data here. My trigger lines look a little silly. If I'm scrolling back on my 13.2 and I'm looking for those tails, let's see if it's coming up yet. I'll rebuild the chart in a second. I'm looking for that odds favorable momentum, and of course I open crude where it doesn't seem to be happening just yet today. Ooh, they sold it off, didn't they? All right, let me open up my S&P. Ooh, and I'm stuck again. Same price I was stuck at yesterday. NASDAQ is always moving, Gary, but if you have any doubts at all, about your rules, if you have any hesitation with your rules, if you have even a hint of indecision, yeah, oh, you know what? I may have. You're absolutely right, Dave B. I don't use my NinjaTrader 7 workspace there very often. I bet you're right. Let me bring it back up and check that contract. Thank you for that. Haha, 523. There you go. Let's put it on the right contract and see if that fixed. Thanks, Dave. I don't use this workspace ever. I thought that was weird. So I can look at my chart and say, well, where's one of those tails with odds favorable momentum? Here's a medium probability, right? Small's outside of the large are wide, they're angled in the direction of the trend. There's one of those tails. Let's go back and circle it. It's circled. Let's see what it looks like on a 5-1 chart. There it is. And it didn't quite make that area inside of favorable large triggers. Not a rules-based trade. But that's the process. If I scroll back just a little bit, all I'm doing is I'm realizing that odds favorable and clear paths don't happen all the time. And here's one that pulls right back to resistance right inside of those large triggers. And I'm just going to start snapping pictures over and over, looking for that best look, circling those tails, and then scrolling back to see if my rules were met. Is everybody comfortable with that? Pull back right to the support right there at the large triggers. Guys, this is a pattern that repeats itself. Every chart, every market, every time frame. All you're doing is developing trust, right? You're developing so much trust through repetition, through taking pictures, through asking questions, that when they present themselves, you're not going to miss them, because there's a 2-part process, guys, to becoming a confident trader, ASAFP. You have to post your trades in class. You have to know if you're following rules, if your rules are met, if you are sticking to the plan that you put before yourself, right? Taking that feedback, 15 hours every week, making sure that you understand what you're doing, making sure that you know the rules for when it's okay to trade, studying it so often through pictures that it becomes easy, right? And it will become easy. Almost overnight, it's going to seem. And then you're developing that trust by putting them in a spreadsheet, that they're so easy that you believe in those advantages so wholeheartedly that you don't miss them when they come about. Guys, that's your plan for success. It's been proven over the last 25 years with Nexgen. Learn the rules, simulate your trades, put them in a spreadsheet, and repeat the process until it becomes second nature. I've created some study aids for you to help you understand. Look at that. Termination condition creates a full reversal. Full reversal gives odds favorable, smalls above, large below, and it pulls right back to those areas right at the large triggers. Pretty cool, right? Am I disconnected? I'm disconnected. So you're going to be able to go through and take a look at those. That's not cool, Marshall? So here's your process. It is cool. It's amazing to me. And guys, I'm still absolutely floored by this software every day. But use that study. Go back on your 13.2. Study these looks, right? Study these tails. And guys, you're not trading the tails. You're not waiting for the tail to form to take the trade. That tail is a byproduct of a pullback to an area of support or resistance inside of favorable large triggers. If you see this look 100 times, do you suppose it becomes easy? If you see this look 150 times, do you think it becomes easier? If you get in the habit of taking a picture, 15 pictures a day, pre-trades, post-trades, during the trades, it becomes easy. Guys, I just put my spreadsheet in the room for you. This is my personal spreadsheet. This is where I have a collection of pictures. There is, let's see, where are we at? So that's 126 plus another 32. So over 150 pictures of high probability and medium probability trend trade entries. I'm also going to give you in the room right now a checklist that you can print out. You can put it on your desk. The rules for a high probability trend trade, you can check them each and every time you take a trade. Make sure that you're following those rules. You can write these rules on the chart, reinforcing that they're providing advantages. I'm also going to give you guys this one. This is the same checklist, but what this one is I've stolen pictures from the manual, straight from the study material, of what each rule means when it's met visually. And then finally, guys, I'm going to share this one with you. This is an example of how to write your trading plan for your first 20 days as you're a brand new user learning to read your charts. It all begins with a little personalization, right? A little ownership in the task at hand. Use the phrase, my trade is. Steal my plan, guys, but make it yours. My trade is the high probability trend trade. To enter this trade, I must have the conditions of the checklist met, and all I'm doing is focusing on entries. 20 days, nothing but entries. 20 days getting in at the areas inside of favorable large triggers. This is the checklist that's going to make it happen. I know what my potential win percentage is if I just follow this checklist. The most important thing when you write a plan is, what does it look like? Go find 20 pictures of longs. Go find 20 pictures of shorts. Put them into your spreadsheet, but drop a couple into your plan so you know exactly what it looks like each and every time. Here's one from the plan. Strong triggers. Smalls below the large are wide. They're angled in the direction of the trend. Notice that the rules are written. No termination condition. And there's a pullback to an area of resistance inside of favorable large triggers. I know without question that's a high probability trend trade, and because it is, it's a picture in my plan. That's what I'm trying to repeat. Here's one. Exact same trade on a different chart, right? Same indicators, different colors. Not everybody sees colors the same. But ultimately, it's the same. Smalls below the large are wide. They're angled in the direction of the trend. There's a pullback to an area of resistance inside of favorable large triggers. And there's some wonderful profits. A little over $400 from a high probability trend trade. And all you've done is defined entries. Now you need to define your management plan. And it has been discovered that a very methodical management plan is the easiest version for new users. I guess I'll share this one with you too. A mechanical approach that eliminates emotion, opinion, is typically the best approach for new users. You can alter your plan when you're done with the education as you learn to read your indicators. But if you trade 2 contracts, the initial stop will be 12 ticks. That's how it's going to be placed into your ATM strategy on NinjaTrader. That's going to be the initial, but it will be adjusted above or below the window of opportunity. If you're in at the mid-band, your initial stop is where the market shouldn't go, right? And then you can move it 2 ticks above or below the reversal bar. You have to wait for something to happen. You don't get to create an opinion. If a reversal bar prints, you're going to reduce your risk. And now you have decreased risk. The market's moving in the direction. And there's nothing to do now. Either your first target is hit or you're stopped out for a small loss. First profit target will be $100, at which point the stop will move to break even. First profit target reached, you have $100 in the bank. You have absolutely nothing to lose. You have a dopamine kick, and because you have no risk, it's easier to hold for that second contract, and that second target will be $200. At this point, you're either stopped out, break even, or that second target is reached. And if it's reached, there it is. Guys, I put this PDF plan in the room for you as well. This outlines everything from start to finish, but it has pictures of that initial management plan. It also, there's those pictures right there in the spreadsheet that I gave you. If you focus on the entries for 20 days, every great entry has a management opportunity. You'll begin the process of identifying advantages, disadvantages, when you can hold for more, when you shouldn't, and create that management plan. And what you'll recognize is that if you allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry and a $100, $200 automated exit, you can adjust your targets based on experience later. And guys, that's our first hour. That's your plan. Is everybody comfortable? Take 20 days, guys. Give me 20 trading days. Looking for the absolute best of the best, right? Looking for nothing but those high probability trend trades. Scroll back. When the rules are met, circle a tail. If you circle a tail and it's a pullback to support inside of favorable large triggers, put it in your spreadsheet. Guys, you can go back 10 days and probably find 20 high probability trend trades, 20 medium probability trend trades, 20 perfect entries giving you the advantage of momentum, the advantage of a clear path, and the advantage of a market entering at the point where it's likely to continue. And guys, that's really our first hour. This is what I do in the first hour. We will talk about each and every chart that you guys have posted, and we're going to start that in the second hour. Right now, what do we see on the S&P? We had one of those 50-50s, right? Look at the divergences. 1, 2, 3 divergences, letting you know this one isn't likely to go any further. This ultimately creates a full reversal, odds favorable. Smalls below the large are wide, they're angled in the direction of the trend. Is this a high probability trend trade? I've got my small triggers below 41.3687, but my large triggers are above. This becomes a medium probability trade. I've already got one loss of momentum on the 5-1, but if I'm looking for a window of opportunity from the highest point of the triggers to the lowest point of the triggers, and I squeeze it down to my highest point of resistance, to my lowest point of resistance, I can identify the point where this market is likely to continue on a medium probability trade, can't I? And then I can make the decision if I entered this trade at 41.3650, a tick or two below that resistance inside of favorable large triggers. Well, I know that it's a medium probability trade, and I know that it has to be managed assertively, which means that if there's change on the 5-1 that suggests that market may not go down any further, I'm going to exit. I'm going to take quick profits. If I was in at 36.50, I've already made $100. I may already be break even on this medium probability trade. It's mechanical. It's methodical. I can put it up against a checklist, and I can repeat this over and over and over until it becomes second nature, guys. That's the plan. All right. We have news in 5 minutes. If I go to Forex Factory, at 10 a.m. we have CB Consumer Confidence, we have new home sales, and we have Richmond Manufacturing Index. I never give trading advice. I don't tell you guys what to do, but I do know through experience that high impact news may create a very erratic market. It may create a market that bounces, that twists, that turns, that jumps, that spikes, and I choose to not put myself in front of it. I like to call it the freight train of emotion. Guys, I'm going to take a few minutes. I'm going to run a lap. I'm going to fill up my water. Probably say good morning to my wife. And when I come back, we'll see how the market reacted to news at News in 5 minutes. And then we're just going to start going through each and every one of your pictures, guys. We're going to talk about everything that you see, everything that you did. And it's important that you understand that when I look at your charts, I'm going to talk about advantages, and I'm going to talk about advantages that were given away. I'm not judging your plan, but it's imperative. If you want the best feedback, you have to tell me why you did what you did, right? Don't just put a chart up and say, hey, Mark, is this a trade? I don't know if it fits your rules. Write your rules. If you deviate from your rules, show me what your deviation was. Get in the habit of learning to police yourself a little bit. I'm going to leave this in the room in case any of you need to go back and re-annotate. And then when I come back, we'll go through it. We'll look at it. We'll have a good time. See if I can figure out how to post that in the room. I thought I just had it. Nope, I lost it. And if you were watching the first hour and you have any questions about high probability trend trades, if you're curious about momentum, if you have questions about entries, if you're wondering about termination conditions, I want you to raise your hand, use your voice, ask the question. We'll get you taken care of. Good morning, Thala. You showed up just in time for my break. I'll be back in just a minute, guys. If your rules get met, take a trade. If they're not, sit on your hands. Back in a few. wasn't it? Man. All right, guys. So, second hour. We are going to go through and we're going to start looking at each and everything that you guys have done. I'm going to bring this plan up one more time. So to minimize your learning curve, this is what we're about to get into right now. Post your pictures in class. Post your pictures of your trades. Every trade, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. After enough of those short-term victories and long-term failures, you begin to believe it. How will you know the difference? To be sure, you need feedback, guys. And we are here to help. I'm here to help Monday through Friday, 9 to 12. Live education. Live feedback on anything and everything that you do, every picture that you place in this room. All you have to do is put the picture in. And if you're on simulator, you participate in class, guys, there's no risk of loss or capital. You just need someone to tell you what you did right or wrong when you're new. And that's part of what we do, guys. And that's what we're going to do right now. So I'm going to scroll up to the top of the day. And just so you guys know, this is my chat box. This is exactly what I have to do to get up to where you guys are. So please, if for some reason I miss a picture, if I miss a question, if anything, let me know so that I can get back and get to it. And Miss Sophia, you started us off today. And guys, remember, if it isn't your chart, you can still ask questions about it. I'm here for you. So let's take a look. Is the market coming from a good top or bottom? Sophie is using that checklist, right? She says yes. There's a termination condition. It creates a full reversal. The full reversal has odds favorable momentum. She checks yes. No termination conditions. She says no. She says it's a 50-50. So it is a 50-50, meaning that this 4150.07 area has the potential to break, but it hasn't broken. An area for entry inside of favorable large triggers. Sophia, you're in at the lowest point, right? So here's what I'm going to ask for you guys. And Paul, I agree with you. This is a great one. Sophia, why do you feel it wasn't a good entry? Because it went higher to the top of the window? But didn't you get in at the lowest point of resistance inside of favorable large triggers? Pretty cool, right? You're better than you thought, Sophia. So let's do this. And this is why we post in class, because doesn't it stink to feel bad about your entry? Let's see. Here's the lowest point of the triggers to the highest point of the triggers. And then there is your highest point of resistance to your lowest point of resistance. Sophia, not only did you get in at the lowest point of resistance inside of favorable large triggers, because of that odds favorable momentum coming from a termination condition, you also followed rules and you kept your stop where the market shouldn't go, which means that when it went up to the top of that window, you were able to stay in and make money. Sophia, this is a perfect trade. This is a beautiful trade. I like everything about this trade. It's 100% rules-based. And because it is, I'm putting it in my spreadsheet because I want to be able to do what you did. Why weren't you confident? And I can answer it so you don't have to type it out if you want. And tell me if you can just say if I'm right or wrong. Let me call this 50-50 trade. You weren't confident, I'm assuming, because the market went up higher, right? Because when you took your entry, you saw this reversal bar and you thought, holy crap, I'm in so low. And then it pushed against you and you thought, ugh, what am I going to do, right? And you did, because you got in so low, you got stopped out. So you took, did you take 200? You got out of the first spot and went break even, right? Went break even plus one. That's okay. Is that what your plan says to do? Take your first profits? You made $300 on a perfect trade. You managed it beautifully. You identified the trouble spot on a 50-50 trade. You took quick profits and got to break even. Safia, there really isn't anything that you could have done any better, except maybe add it on at the mid-band because the rules were still met 100%. So I think you did an amazing job. And I think that coming into that trouble spot, adding on, it means that, and I'm not telling you what to do here, it means that when you get in on the first one, the rules are still met here, right? You can just buy market. Because it's still in the window. It's still rules met, 100%. Another way you could do it, and I've seen this done. Let's see where we're at. Let's say hypothetically, I want to get in at the mid-band. I can have a limit order waiting at the top of the window as well, right? Or just hit sell. And I'm saying, well, I don't want to miss it, but if it stays inside that window and all of my rules are met, I'll buy more or sell more at the top of the window. Does that make sense? Some people will put 2 down here at the bottom and 2 up top. Some people won't. Just something to look at. But I've taken trades that are so perfect that when it comes up to the top of the window, I'm like, oh my gosh, that's worth another 2 contracts to me. So thank you for sharing that. And when you get into a trade, ask yourself, are my rules met? And then you took one today. Let's see what you did today. I like the circles, right? Everything says up. There's a circle. You took one at support inside of favorable large triggers. And then it creates divergence. You are a 50-50. And I guess my question on this one, Safia, what got you in? What got you in right there at 38.25? What was your area? And it looks great after the fact, doesn't it? Didn't get a market flow signal yet. Was it taking out this pivot because of the divergence? Because I know as you're coming up, divergence printed, which means that it may push lower and probably take out this pivot, getting in at the pullback to the synthetics. Ooh, I never told you that. We may have had a misunderstanding. I always say trade from areas, don't I? Trade from areas inside of favorable large triggers. What you did is you recognized that the synthetics were lower, that divergence had printed, and that it was likely to close the gap back to the synthetics. It's very well done, Safia. No, don't be sorry. But you didn't have a place to bounce here, which is why I asked. And this is where I may use that market flow a little bit. It'll cost me some ticks. Of course it will. We talk about everything, don't we? It's a beautiful trade. I was off grabbing something to eat when this trade set up. I love everything about it. If I was in here, I think that's great on that pullback to the synthetics. Just as long as you understand why you did it, so that it's repeatable, right? So that you can study it. And if you got in here, was your stop below support? That would be my only question. Then I love everything about it. And I love this quick profits. Are you finding that you're making more money like that? Not holding for home runs? Good. And then that divergence prints, and you get out. Beautiful, Safia. And just keep it repeatable. Make sure that you can keep doing this every day, that you're so consistent, that you're not worried about deviations. You're just taking those great looking trades with all those advantages each and every day. Now I'm going to scroll back up. Man, you guys have been posting. I love it. Oh, that's yesterday. That's yesterday. I scrolled way too far up. I'll be right back, guys. All right, here we go. Sorry about that. Gary, let's see what you're doing this morning. Gary, weak triggers at a termination condition. Weak triggers, but you pull back, pull them back. Termination conditions 13.2, you said no. Gary, this is nothing but termination conditions at a 13.2. I'm glad you got paid on it. And I hope that there was another chart leading the way. But you traded right into rule number 2. And just because it went up doesn't mean that your checklist didn't have a mistake. But the advantages. So let's talk about the advantages. Those one-to-ones are there. They're problematic, but we're in a strong uptrend. Everything on every chart says up. And you take a shot from that area that's likely to hold. I think that if you're going to take this trade, Gary, you took it from the best spot with aggressive management. And I really think it's very well done. And then your termination conditions keep you out of the long. Nice job. Great trades. Guys, this is an awesome picture. This picture says my rules aren't met, I'm not taking the trade. And I think that's probably one of the best pictures that you can take. Tony, you have 3 buy stops, can't move it either, charts won't look compressed. Are you on 8? Yeah. You have to reboot. You have to reboot and it should go away. I've had that before. Gary, you say anything can happen which are above the one-to-ones? Are they? It's close. That's all right. I love the execution, Gary. I'm not knocking your trades. I don't feel like we cleared that one, though. But that's up to you, right? It's your trade. It's not my trade. I think you executed it perfectly. Ron, let's see. Everything says down with momentum. So you get in on the way down and get out at the trouble. Ron, consistency. I want you guys to pay attention to Ron's charts. Even if your trade isn't his trade. Every trade that he posts looks exactly the same. And guys, here's that S&P, right? 3 divergences in the same location on a 50-50. It's a pivot stop out. Not taking that trade, right? Not taking that trade. Rule number 2 keeps you safe. Nice job. And then Gary, once again, we've got that termination condition that creates a full reversal. That full reversal provides odds favorable. And what you've identified here is a momentum style trade. But since it's outside of the triggers, you're saying that it's not my high probability trend trade, and it didn't make it back to the HVA. That's a momentum style trade, Gary. Study this look. It happens a lot. Creates opportunity. But it all starts with, let's go back and on. It starts with a termination condition. You need at least a full bar and a clear path, and that little spike back with those super strong triggers creates opportunity. And then if you don't take that one, you get the high probability. Right back to it. And awfully late though, right? Because you use market flow confirmation. Got you. Gary, did you need market flow confirmation on this one? No, it's okay if you don't have a rule. But strong triggers from a termination, it is 50-50, no divergence, strong triggers, tiny window of opportunity. And it lines up with an HVA with strong triggers. Gary, that's one of those get in at the areas. It's still a great trade. You got in, knocked it out, made some money. Great trade. I think this is one of those instances where the area makes sense. 50-50 trades, no divergence. On the 5-1, enter the trade. 50-50 with divergence, use market flow. Nice trading this morning, Gary. Kind of rocking it. Alan, let's see what you got. Same trade. Nicely done. So Alan, 50-50, right? Beautiful entry. Creates manageable trades. First profits. After this pivot, you're already in a good spot. No risk. Market comes all the way up to, what is that, 11? In at 80, you're up over $300. Market pulls back, potential entry. There's a lower divergence. Man, you gave a lot back, Alan. And that's okay if it's your plan, if that's your runner because of the momentum. If you're using Apex, and Alan, I don't know if you're trading on Apex. This will kill you because you were up $300 and you gave it back, which means that your trailing drawdown went up that $300. That it's from your highest profit point. Does that make sense? Yeah, so from an Apex standpoint, betting the farm on runners is not advantageous. Yeah, and it's just a different thing. Get in, get paid, wait for the next one. And what you'll find is on Apex, you'll be way more successful because even though you won, nope, it's from your highest point. If you're up $1,000 in a trade and you only make $100 on it, your trailing drawdown has just decreased $900. Because what it does is it's telling you that that you're not taking profits, that you're willing to let the market come back and take all that money from you. Yeah. So just a little Apex trick, not necessarily management. You had reasons to hold right up until that second lower divergence with the small triggers screaming down. But don't be afraid to take profits if you're on Apex. And again, I'll never tell you guys how to trade, but I have an Apex account. And I did that before, trying to hold for home runs. Kind of kicked my butt a little bit. Let's see where we're at here. Guys, I appreciate the pictures. Ron C. Man, that one's a little outside of your norm. Sniper sitting on the rooftops. 3 divergences. Ron, throwing me for a loop. After I tell everybody all your trades look exactly the same. Safia. Good bottom, absolutely. Nice entry. I love it. How did your stop end up all the way down here? All right, so let's look at this one. Safia, absolutely beautiful entry, right? Let's talk about management for a second, guys. There's your stop, probably right behind the reversal bar in the direction of the trade. Another divergence prints, everything's coming down. And Safia, you have no areas inside of favorable large triggers. Just no way for rules to be met here, right? But you're thinking, I'll let it go to the synthetics. This is why I don't care for split triggers. And it does go to the synthetics. And you put your stop behind there, but then you have that third divergence. Everything's changing. Becomes problematic. I think if you take this entry because of the split triggers, there's no reason to keep $300 of risk on that. It's a bit excessive, I think, especially with all the information the 5-1's given you. 5-1, 2 divergences, lower divergence, small triggers inside. Says that we're probably pushing to the lower area. Great entry, though. And then Ron C. There's the Ron I know. Goal met for the day. Everything says down. Everything's going fast. Jump in, jump out. Goal met. Go hit the beach. All right, Paul, your charts keep getting smaller and smaller on me. It's like you're mad at me. Anything can happen triggers. Anything can happen triggers and divergence. You take one shot from a mid-band outside of favorable large triggers. Quick profits, break even. I like it. I think if you're going to take this trade, you took it well. It's not a high probability trend trade, right? And that's okay. If you go into a trade knowing this trade has challenges, I'm going to manage it assertively. Great job. All right, Safia didn't follow the rules. It's an emotional trade. I agree 100%. And Safia, this is one of those reasons why, and guys, remember, I don't tell you how to trade. That's not my job. My job is to help you understand advantages. I don't tell you when it's okay to pull the trigger. You have to do that. But this right here, this is why 101 education says trades come from areas. Because we have 3 pictures so far of trades not coming from areas, expecting synthetic triggers to hold without that place for a bounce. And once it worked and twice it lost, which means that you have a situation, right? You have only on 3 trades, but right now you're seeing something that wins 33% of the time and loses 66% of the time. And that's how I look at this. So even if you broke this rule, right? Even if you broke momentum and is a 50-50, that third rule might have saved you. It might have kept you out. And it's okay. You posted that it was an emotional trade. And we have those sometimes, guys. Everybody has an emotional trade now and then. But what you're doing, and this is just my 2 cents on it, and it's worth exactly what you pay for it, is when you begin to form the habit that trading from just a trigger rather than an area without going back and studying it and seeing how often it wins and how often it loses, you're setting yourself up for an awful lot of these. You're deviating from the plan, And I feel comfortable saying that there may not be 100 pictures in your spreadsheet of entries coming from synthetic triggers. All right. Pivot from space. Full bar back to the large triggers. Paul, you say no long for you. I didn't know you were gone. Did you hear what I said? Or do I need to rewind? No worries. You're probably not going to like it as much as you think you are. So here's your emotional trade, right? No, it's okay. Let's take time. And it's okay. You knew that it was an emotional trade and you knew that you weren't following your rules. And I think it happens, right? It is what it is. But what I think the lesson on this one was, Safia, is there's a reason that in 101, there's a reason that this foundational approach is taking trades from areas. And what you'll find is if you're consistently going through any trade that Nexgen teaches, trades come from areas because areas provides a place to bounce. Here's another one. This is your third one today, coming from synthetics. And this time it's from the bottom of the synthetics. And I know that it was emotional, and you know that it wasn't a rules-based trade, but what we've established today on 3 trades is that trading from those synthetics without areas is a 33% win ratio right now. 33% winners, 66% losers, and the one common denominator is trading without an area. And I think this is why we post in class, and this is one of the advantages of what we do here, is that, Safia, you're reading, right? You're reading, you're seeing, you're doing great. But this one appears to be biting you a little bit because you don't want to miss out. So when you find yourself doing these emotional trades, when you find yourself trading without the advantage of an area, take a deep breath, right? And don't just put didn't follow my rules. Write on that chart, why did you do what you did? Well, the smalls were above the large were up, it was coming from a good. Look at your large triggers on here, and see, that's the key. You said, I thought it had momentum. So when you say something like, I thought it had momentum, this is where the lesson comes in. When you really have momentum, these large triggers won't be flat. It goes back to those favorable large triggers. It goes back to areas inside of them. And you know what's cool, Safia, is if you would have taken it from the area right here, that would have been your stop. You might have taken a small loser and abandoned the desire to hope, right? Because you would have been in right at the mid-band. And honestly, you probably would have gotten your $300 and been break even. But when it started to go up, you thought, man, I'm going. I think this is a great one. So don't sad face it because there's lessons there, right? Turn that frown upside down. Every trade's a lesson, guys, especially on simulator. Every time you do something, win, lose, or draw, there's an opportunity to learn. You're welcome. My job is to recognize the patterns, and I think right now the one that's not serving you well is deciding that synthetic triggers are a great place to enter a market. Thank you for sharing that. Guys, it's not always easy to share a loser, and it's even more difficult when you know you didn't follow the rules. So learn a lesson here. Post them, everything, win, lose, or draw, and you will get better at what you're doing. All right, Paul. Oh, and that's the one we looked at, right? So what's Paul talking about here? We're going to sidebar for a minute. Paul says full bar. What does that mean? New users. Oh, I want you learning this lesson because this is going to keep you out of an awful lot of trouble. What Paul's talking about is what we call the gap theory here. And the gap theory says that if price pulls away from the synthetic triggers too fast and too far into an area, it'll snap back to the triggers. It's not guaranteed to snap back to the triggers, but more often than not, it will. And that looks very much like this. Price accelerates away from those large triggers, goes smack dab into a mid-band. That's right, I said smack dab. See how your large triggers are way up here? That's a reversal bar marker. There's room for a full bar to get back to those large triggers. Shorts taken in what essentially is a vacuum here as price gets sucked back. Shorts taken in that area turn out to be financial suicide more often than not. Same idea here. All the way up to Fibonacci resistance, the large triggers don't follow. And Safia, this is a little bit of why I think you're doing what you're doing on that pullback. But the key is to make sure that you have areas where that market's pulling back to. And it just keeps you out of trouble by recognizing that it may suck back to it. So here we go. Price right to that mid-band and the large triggers are below. And I think what Paul was just saying here is that even though it's tempting, it may slide all the way back to these synthetics. I'm just going to hold off a second and see if it pulls. This is a great picture, guys. It has absolutely nothing to do with entering a trade, and it has everything to do with chart reading. So steal that picture. Go to chart reading things. Post the picture in there. Guys, the faster you fill this spreadsheet, the more knowledge you're going to have. We'll just call it gap theory. Thank you for the picture, Paul. My spreadsheet's one picture stronger now because of you. I appreciate that. Scrolling up, Fulgore, 688. Let's see what happens. Are you going short here? Morning. So you're saying when the smalls get below the area, the large are still above, but the smalls are down strong. It's not a good top or bottom. I'm going to disagree with you on this one only because your trigger lines have made it above those one-to-ones, which for me, it negates the possibility of it being a strong top. When I talk about a strong top, let me show you what I'm looking for. Because I don't just want to say no, right? Let's talk about why. A strong top's not going to have those triggers breaking through, right? It was close, right? And if you're looking at the whole world, Texas is close to California, but it's still a long ways off, right? So when I'm talking about strong tops and bottoms, man, I'm talking about no trigger lines break through, right? That Fibonacci area said absolutely not, under no circumstances are you breaking through me. So this one can create challenges. Notice how your large triggers are still above those one-to-ones. And really your small triggers are struggling to break through. Now let's talk about the positives. Over here on your smaller, faster chart, you definitely have momentum, and you have it after multiple divergences. Weak triggers here, large triggers roll, everything down. And what you're doing is you're taking a momentum style trade. And really your entry for the momentum style trade was this one right here, because now we've had 3 pivots, and it's at a potential pivot stop out. You got in, it looks like you got out, maybe got in again, and you're looking for that continuation down. It's the best of the best look, isn't it? And if this is just a little bit of overrun, well, then you absolutely rock start it. Mid-band on this style trade is typically your first target, especially. No worries. It worked out. Good fluke, right? It's nice when you get lucky. But on this style trade, that momentum style trade, that mid band is a great first target. And then the fibs. And then really, who knows? But I would at least keep eyes on that 54 area as it comes back to the mid band, especially when my large triggers are a full bar away. Does that make sense? Because now we're coming into that potential gap theory. Awesome. Great picture. I think it's awesome execution. And guys, I love to celebrate the little victories. If you're going to do it, man, that's the rock star. I don't know if I would leave 3 points on it, because if it breaks above this resistance, right, it's not really a momentum style trade anymore, especially into a pivot stop out. Great trading. And what did it do? Was this it up here? I'm not sure. 41.62. Oh, it was even further up, wasn't it? There's those one-to-ones, and it was, in fact, a little overrun. Good stuff. It was last night about 9 p.m. Yep, that's the one I was just... It was right there, wasn't it? 1601. So see how it was a little bit of overrun. Awesome entry. And then it just never stops, right? It never loses momentum and gives you any reason to get out. Really well done. Identifying overrun. And that's all this is. This is the market pushing up so hard. Good stuff. Guys, excuse me for just 1 second, please. Rule number 1 of Fight Club is always kiss your wife goodbye. So Folger, nice job. I like 300 on one contract. That's not a bad one. And you understand why you did what you did. And I think that that's the key is making sure that you understand why you did what you did. You had what appeared to be a little bit of overrun. The market started pushing down. You took a momentum style entry. I mean, honestly, man, full-blown rock star. All right, Gary. Pivot from space, 50-50, no divergence. Get into the area. Where do you see 3 divergences? Let's have a divergence lesson real quick. So let's talk about the difference between divergence and a pivot. Let me take a picture. Because Gary, since divergences are on your checklist, I think this is a pretty important thing to go through. Here the market goes up and then it goes down. So what we have here is a pivot. It's pivoty. Does that make sense? All it means is that the market went up and it went down, or the market goes down and then up. And you're cool with that, right? The only time it's divergence is if that negative number prints, if that magenta or cyan line prints. So here we have a pivot with divergence. Pivots are going to happen all day long, right? So on this pivot, there's absolutely no slowdown, which means on a 50-50, that's amazing. Now you have one single divergence with small triggers outside. Triggers are beginning to split. But if you stayed in or you entered here, it's only one divergence against a 50-50. Here you have a pivot once again, right? And it's a pivot stop out, but there is no divergence on this pivot. So you've only had one pivot. What you're seeing here is the market getting a little wishy-washy. But I think for the sake of your checklist, if the market is supposed to have divergence for you to look for a market flow confirmation, and there it is right there. You did have confirmation as well if you were going to take it. But you had an HVA, you had support, you had triggers, you had no divergence, and you had strong triggers, and you hadn't reached your potential midband yet. And then when it gives you the double top, weak triggers, management opportunity. But I see you miss this one every now and then, and I think that may be why. It's only divergence if those lines print. That's a good lesson for everybody. Great picture, Gary. Thank you. Thala, 50-50. I like it when you write 50-50 in the chat box. Thala loves the gold, don't you? All right, so Thala, 50-50, right? Here we go. Strong triggers. I'm going to assume you were asleep, but I want you to see something. Here's your first 50-50 with the most unbelievable stacked areas inside of favorable large triggers. Do you see it? Why no trade here? Maybe you were getting coffee, had to scratch the dog, logged in late, no worries. So let's look at this one. Now we have a 50-50. And I've got that loss of momentum, but what else do I have? I've got split triggers, right? There's still only one area. If you got in here, I could still make a case for you. Yeah, all right, it's the first shot at a 50-50 at an area with the potential to break. But then you get a second divergence and weak triggers. And if you got this one, well, you got lucky. And then here you get three divergences, which we know is a termination condition at an area that hasn't broken. And you're entering the market without an area for support. And you made quick money, but look at the difference. Your large triggers have rolled, your small triggers are down strong, your mid band's magenta. There's no areas inside of favorable large triggers. And this area hasn't really broken. And man, if you're using this chart at all, that 21 is full-blown gap theory pushing down. Does that make sense? You got lucky on this one. This one is not going to work a lot more than it does. And this would be one of those short-term success, long-term failure moments. Because more often than not, this one kicks your ass, pardon my French. You had every indication on all of your charts that things weren't going well. And the market is not coming from a good bottom. That pivot is from the middle of nowhere, which means that the odds are pretty likely that it's going to continue to the downside. Does that make sense? That's a lot of arrows. Great picture, Thala. So much information and so many great lessons in the picture. And I'm glad that you got lucky, because if it were up to me, you guys would get paid on every trade. Unfortunately, I'm not in control of that. All right, Paul. Let me make it bigger. Smalls working their way below the large. Fibonacci to the tick. Fibonacci to the tick. Fibonacci to the tick. And just for grins, there's a yellow reversal bar from the outer band. And Paul, is this just a picture saying my rules aren't met, therefore I'm not taking the trade? Phil, I wish it were up to me too. I'd be teaching this from my private island. Guys, this is a great picture to take. All this is saying that my rules aren't met. I'm not taking the trade. This is which rule wasn't met. The cool thing is on this picture, even though it's itty bitty, is this is one more thing to make me a little bit smarter. Put it in the spreadsheet. Call it term. Now I've got one more under terminations to look at, to study, to understand, to get better at. All right, Joel, let's see what you did, my friend. Joel, right here we have resistance holds, everything rolls, tons of momentum, small's outside of the large, and it pulls back to resistance inside of favorable large triggers, and it goes all the way down to the trouble spot, which is approximately 20 ticks, give or take. And then it pulls right back to resistance inside of favorable large triggers in case you missed it to finish the move. Joel, great read, great circles, nicely done, and great patience staying out of trouble in the middle. Nice job. I lost my spot. Thala, 50-50. Paul. All right, I lost my spot, guys, but I'm coming back. Thala, we got you. Paul, what was that one? Was that termination condition picture? That was termination condition picture. Here we go, Paul. Eventually, the trailing drawdown stops trailing if you get high enough balance. And you said you did this on sim because it wasn't your best look? I love that. Termination, termination. So you took it on simulator. So Paul, let's talk about what went on there that gave you a fighting chance. Termination, everything rolls, market screaming down, every chart says down, no divergence, tiny window of opportunity up here at the mid-band. And with all that momentum, it's more than likely going to come back and retest because odds favorable momentum pushes the market. I like that you didn't take it into a termination condition. These are the ones, there are traders that with no divergence, they're willing to take it because that much momentum typically creates a retest. Good morning, Miel. Let's see what you have, my friend. Whoops. All right, let me figure out where we're at here. Dun, dun, dun. You guys are making me work for it. That's at 8 range. That's a 13.2. That's a 13 range. I'm looking for an entry chart. There's your 5-1. All right, so 13.2. Everything's down, small's below the large. Gap theory pulls it all the way back to those large triggers at the mid-band, right? Gap theory in place. We talked about it earlier. When gap theory pulls it all the way back to those synthetics, it pulls all the way back to the mid-band, to this area. It prints divergence. Still kind of on the wrong side of things, but an area likely to stop the market. It's not a conventional entry, without a doubt. But I think it's a good read, and I think that there's opportunities there if you write some rules for it. All right, Paul, you're keeping busy today. Classic crude. Go all the way up to here. Stop everyone else before going. Termination, so not trading. Oops, trying to see what your 13.2 said. Your 13.2 said termination condition anyway, right? And you had divergence from a termination condition and divergence from a termination condition in areas outside. So it's not a rules met trade anyway, no matter how pretty this is. You had plenty of reasons to believe that that market was going to react to a key Fibonacci area. Isn't that amazing? Rule number 2 says don't do it, and sure enough, you would have been stopped out. I'm a big fan of rules. Folger, market's pushing down. That's everything going through. Folger, you're missing fibs without a doubt. No divergence, there's the first entry. One divergence, you take that entry, and you get back out in the trouble spot. Folger, a lot of fibs missing on your charts. I don't know if that's intentional. If you're not running synthetics for a reason. But there's a lot of blue lines right there, trading into them. Like if you look at your chart and look at Paul's chart, you had support, you had 5-1 support. It's running those synthetics on there. And Joel, I think we saw yours. That's why I couldn't find it before. We did. We looked at yours. And then Paul. No, missing from the chart. So you're not running any synthetics, but your 5-1, where'd yours go? I'm comparing even Paul's 5-1 had that fib coming across, and it's native to the 5-1 there. Are you going through each and every day? Are you doing the daily maintenance? Not always, so that could have an awful lot to do with it. And especially with 8, it's pretty important. What I like to do, and it's going to take 15 minutes out of your day today. Go through, let me show you. And guys, I do this about once a week. It's not a huge pain or burden. But when it looks like things aren't quite the way they need to be, I'll delete my old charts and templates, right? And then I'll go to resources. And then Folger, just rerun the indicators and get those fresh workspaces. And go through, deleting cache tick and just get that full reset. It typically takes, whoops, that was the wrong one. Yeah, no worries. I'll tell you if I see it. If I notice that your charts look so different from everybody else's, I'll typically ask if you intended to do that. And if you didn't, then a rebuild might be in order. All right, Paul. Great momentum. I love that you started there. Momentum looks like a clear path. It's moving inside, but there's no divergence. So you take it from that low point, right? Stop where the market shouldn't go to see if all that momentum is going to push it from an area that's likely to stop the market. How'd that one turn out? And then Folger, we saw that one. Sorry guys, I'm doubling up on stuff. All right, Phil. Small loser, worth a shot, 6 or 7 ticks. I love momentum. All right, Phil 918. Trend short, 13.2, slightly below. Very wide, large triggers matching the 21.3. All right, Phil, are you with me? Cool. So I want to talk about what I see, and let me know if you notice this. And I'm going to talk about the language a little bit as well. 13.2 is weakening, right? Smalls are working their way back inside. Okay. You mentioned the very wide, large triggers. And the reason that I said I'm going to talk about language a little bit is because when we talk about that momentum, that advantageous momentum, of course, what we're talking about, and this is for everybody, I'm going to turn your chart into a lesson for the gang. We're talking about that separation, right? And we're not talking about large, wide triggers on their own. We're talking about that gap between the small and the large. They're both, your large should be wide and angled in the direction of the trend, but the small should be outside. And I want to talk about what John Novak calls a momentum phase on the large triggers. When those bars are outside of the large triggers, this is what he calls the momentum phase. And this is where you're going to see those small triggers outside of the large as well. Do you notice how when the smalls begin to work back, the bars also work their way back in too? And when you go by and you look at reversals in the market, you'll notice that those bars work their way inside of the large triggers, typically right before a reversal. So when we look at yours, not only are the small triggers inside, but you'll notice that the bars are not only inside, but already working to the other side. Which is a pretty good sort of, man, I'm losing momentum, something fierce. And then if you look at your 5-1, you kind of see the same concept, right? Not only are the smalls not outside of the large, but now all of the bars are inside, and you have a visual cue that we're losing momentum. So visually, we're losing momentum on the 13.2. Visually, we're losing momentum on the 5-1. And on the 21, it's the same thing. Look at how far into it everything is. You did have a clear path, without a doubt, but you forfeited the advantage of momentum, which is cool. This is a great momentum lesson right now, right? And then the second half of that, and let's bring up the picture because I'm a huge fan of medium probability trades, guys. I have no fear on a medium probability trade when things are going well for me. But a medium probability means that I'm forfeiting maybe one thing, right? So your trade already gave up the momentum. And that's cool. That's not a deal breaker for me. But you also gave up an area inside of favorable large triggers. And what you're going to find is that when your areas start getting to the wrong side of everything, you're kind of giving away even more. Does that make sense? So we're losing it, we're losing it, we're not inside of it, we're losing it. And what this trade really becomes, and I know this from personal experience, hey, good morning, Mike W., is this is the doggone it, I didn't get paid enough on that giant move down, and even though it's exhausted, I really want to get paid now trade. Anyone ever taken that one besides me? More than once. But I think the idea, guys, is if you really let your brain focus on the advantages, why is this trade going to win? It's going to win. Why is it likely to win? Why do I have advantages? Momentum, clear path, entry area. When you begin to recognize those advantages going away, you have to realize that it becomes pretty low probability. And I think you managed this one about as well as you could have. area likely to hold, and it just pushes beyond it. But great lessons on trigger looks there, right? Look at how far away they are. Great picture, Phil. Thanks for sharing that. And I think the other side of it, has anyone ever taken a trade and you're like, I crushed it. And then that jerk mark starts to show you things that you didn't recognize. You're like, dag nabbit. But it makes you better. So Phil, what I would do is I would re-annotate this bad boy, right? I'd take that picture and I'd go back and I'd talk about the looks. Because if nothing else, you verbalizing it or, typing it out verbally is going to create that opportunity for you to maybe avoid these losers in the future. And then this one is Alan. Strong momentum, clear path, no divergence. Little weak here, perfect entry, doesn't work. All day long, Alan. I think you and Paul took the exact same trade there. All day long. I love this trade. Gives you a management opportunity, right? And you were in at 27 flat, and it didn't even make that $100. So I think it's the right trade. I think it just didn't work. Anything that wins 70% of the time has to lose 30%, guys. It's math. Who was this? Earl? Earl, you've really kind of you've gotten this one down. I like it. When everything says down, get in, get out, make your money. You've really taken this one, and your execution seems to be great. Nice job. All right, Thala, 50-50. Is it really? Thala, do you ever change your checklist? Or do you just throw it up there with all yeses to feel good? So here's the lesson we're about to go into. All right? We're going to do this. Is the market coming from a good top or bottom? What do you think, Thala? Is it a termination condition that creates a full reversal? So I have to go no. Do you have odds favorable momentum? Are these triggers even the least bit wide? Not really. The fib is here, right? Your pivot's here. So let's go back and let's look at strong tops and bottoms real quick. And then we'll come back to it. Guys, I love these lessons. When I'm talking about a strong bottom, Thala, price reaches the area, and man, those trigger lines don't have a snowball's chance of getting through. This is the termination condition that creates the full reversal that provides the advantage. What this is really is a pivot from beyond everything. That's why people were going short here, because you had a clear path down. So, and I think these are great lessons. And when we talk about odds favorable momentum, Thala, do you ever look at the 21 chart? Not the price, if the triggers. So change your verbiage. How do we determine a termination condition? Price reaches, triggers don't break, right? So if the triggers all break, then we no longer have a termination condition there. Let's go to the picture. I love it when you guys post these pictures because this is how we get better. No trigger lines go through, potential termination. So once smalls and large break through, man, that area is broken, right? Clear path to the upside. And that's exactly what you had here. You had a clear path to the downside. The larger way below, yeah, this is a good lesson for everybody, not just you. But if you are looking at the 21, I'm going to do this real quick. Whoops, wrong one. Thala, is there anything about these triggers that suggest a long isn't going to get its butt kicked instantly? And things happen, right? But that 21, that's your absolute greatest momentum with absolutely nothing in the way. And now I'm going to couple that with large triggers still below the area. And then on top of that, I'm going to add, you're not trading from an area inside of favorable large triggers at all, right? So not even looking for this little momentum trade because we're not coming from a good bottom. And we're not coming from a good bottom because this thing says freight train to the downside. I would be sitting on my hands. And if nothing else, these areas are probably going to hold and push back down. Does that make sense? Let's go look at the ES. Let's see what did happen. Now we're getting to that mid band from that pivot. And the 21 said what? 21 said we were screaming down. So if we were just looking at a 21, I don't think I have one here. I don't. And the 21 had odds favorable momentum and no termination conditions. And you were looking for trades on the 13-2. That would probably be a pretty good window of opportunity for continuation down. Now everything says up at this point, so it's not a trade yet. Just little things that I go through. And if these large triggers break back above and there's a clear path, absolutely, man, take the trade. The rules are met. But right here, because it's not a termination condition, the rules really aren't met for a momentum trade. Yeah, I think that you had the right idea, a little premature. You did have the momentum behind it. You did have the momentum behind it. And now we're into that place that could cause problems. And then that loss of momentum is your potential exit as it pushes back. So you're nailing it. It just becomes lower probability when it's not coming from a good area. Well, it is going up, right? Whoops, I just lost Discord. I apologize. Let's get back in here to you guys. It is going up. But what I always ask, Thala, is just because it's going up, is that the most likely outcome based on what my indicators are telling me? Now we're into this trouble spot. I'm not going short against momentum, right? You got in long with momentum, and you can identify where it's likely to push to. And you got in at the right spot, and you took quick profits on momentum trades. Cool, be happy to. I'm going to go to Discord for that. You guys aren't going to believe this, but we have rules for like everything. So let's look at the momentum rules. Do you have a checklist for momentum trades? You can make one. Strong triggers on the 13-2, right? Know where your target condition, trouble spots will be. Termination conditions, not trading into anything at all. Make sure you have room to the target. Check your 5-1 small trigger strength. It has to be strong, just like the 13-2. Enter the pullback to fibs and mid bands. Thala, your execution was solid, right? And I hope that came across. Your execution was solid. Momentum in, momentum out. It's not a home run trade. So your management was solid as well. Because it's not coming from a good bottom, and because the 21 supported more down, and I know that you're looking at it, Yeah, there's opportunity for a quick little pop there. But because the large triggers are below and everything, and it's not really uh, a trend trade, your execution was great. And the fact that you're not holding for home runs on these lower probability scenarios, this becomes a much higher probability if you're coming from that good bottom. And if we scroll back, let's look at the one that Folger took here. And that's still not the perfect. But because none of the trigger lines are able to break through that termination condition, there's the same trade to the downside. Do you see it? But because none of the triggers are able to get through that key area, you don't have a problem spot till way down here. Yeah, same trade. You executed it just as well. No divergence on the pullback, straight from the mid bands. And now we're into that termination condition. It just becomes more powerful from a good top or a good bottom. But I think as far as being solid, it's good. And I think what got me on this one is it's 50-50. 50-50 doesn't apply to the momentum trade. 50-50 is a trend trade. Great job. Pivot from space. There's the mid band. Right at resistance. And this is kind of what Gary was saying. Because it's a pivot from space, Gary saw the other side of it. Price gets right up to that mid-band area, that first potential target from a pivot from space. He's not looking for that opportunity because it's not a good termination condition. So we get to see two different sides of it there, which I like. Both are correct. That's the cool thing, is both are absolutely correct. You just have to go through what your preferences are, right? Gary, I was just looking at your picture. Thala took the momentum style, took quick profits. After that divergence prints, you said, well, I reached the mid-band. Choosing not to trade into a mid-band with the large triggers all the way down by the reversal bar marker and below support from a bad bottom. If you didn't take the quick pop here and quick profits, that becomes a much lower probability trade. I don't think either's wrong. I think it's just different reads by different peoples doing different things. And you're going to get that all day long, right? Absolutely no trigger lines through the area. Large triggers are 6 points away. We'll see what happens. Whoops. Where's my crude chart? Sometimes if you toggle between charts, but that untitled is up, you get this. There's a termination, creates a full reversal, creates odds favorable momentum. Let's see what happened at 64. Didn't get it, right? And then it's into that termination condition. Divergence prints, pushes it all the way lower. And crude's just not giving you a shot. That's not how it works. And Thala, all we're talking about right now is what you see, right? Now you're taking a momentum style trade with a loss of momentum, and it's working out for you. But at least now you've got odds favorable, right? You've got odds favorable. Everything agrees with up. Those triggers are coming up. They're coming strong. Still not trading from areas inside. So Thala, when you took the trade, and again, it's working out for you, and I dig it. What made you decide to enter from the mid-band floating up here rather than waiting for 26.95 where it was inside of favorable large triggers? Right? It's okay. We're just looking for things that are repeatable. things that happen over and over, things that you can create a plan off of. Things that provide advantages. Since it was near the midband and 1-to-1, fair enough. And the 1-to-1's right at the top, right? Guys, everybody's going to trade different rules. Everybody's going to have looks that are comfortable to them. Everyone is going to take trades that are outside of the high probability trend trade. It's just a fact of life. My only goal for you guys is that whenever you take a trade that deviates, that you understand not only that you have rules to take what you took, that you've identified advantages, and that you're comfortable with what the indicators tell you may be a potential disadvantage. And then it allows you to manage assertively. And Thala, you're taking small little bites and adding up profits, not looking for home runs. These are great trades to do that with, right? And then everything clears and you get that trend trade, and then that's the one you let go for the home run. No worries. Tops and bottoms, good tops and bottoms, the easiest way to do that. That's a good bottom. Price reaches support, absolutely no trigger lines go through. That's the best of the best, right? When you get a 50-50 that fails, not the strongest. When you get a pivot from nowhere, it's a little less strong. But you can kind of go through and see this. No triggers go through. I love it. No triggers go through. Solid. No triggers go through. Man, these fibs are good, aren't they? Awesome. Overrun. But divergence prints. The area breaks. Not the best bottom. But eventually, everything rolls and gets back above it. Almost to the tick. Down it goes. 50-50 doesn't work. Not the strongest top. But look how it pushes down. And because it's not the strongest top, the buyers take one more shot to a perfect termination. Guys, you can go through and look at these over and over. And this is great study. So take a picture. And then annotate it. Strong bottom, weak top. Strong bottom, weak top. Strong bottom, strong top. And just get in the habit. You can do this on market play, 50 times speed. And just keep going through. This is what I see. This is what I see. This is what I'm doing. Post the pictures in here. We'll talk about it. Great lessons. Guys, your pictures are creating some awesome lessons today. Was doing school drop-off, going to repost this small loser. Thala, there is no likely to. That's an opinion. When you say it's likely to cause a strong top, Paul, you took the same short everyone else took with every reason to take it. Didn't work out. Small loser. Absolutely. So Thala, let's try this. In case you guys didn't know, I'm a little bit of a language nerd. I think it's important. If the market reverses, then I have a strong top. Because doesn't it take a full reversal? But Thala, check this out. Show me a picture of your 21 again. Let me pull it up. Let me go scroll back to it. Come on, come on. Now it's going to go slow. I've got a picture of it. Yeah, this is pretty cool, right? Watch this. Didn't your 21 say everything's going down with momentum? And remember when I said it's likely to push up, retest from the bad bottom, and maybe continue down to that next key area? Here come patterns, right? Here come patterns. And that keeps me from going long into 36. You took your little chunk out of it. I like it. But it also keeps me, termination conditions keep me from hoping that 32 holds, right? It's all patterns. But because of the 21, you knew that you weren't looking for home runs. See how you can incorporate that next time frame, that chart reading in? And it doesn't mean that this wasn't solid and you did a great job with it, but you knew that it wasn't likely to crank up and go to 45, 50. And then when we hit resistance, the large triggers were a full VAR away. One more reason that mid band becomes financial suicide. And I guarantee somewhere there's a Nexgen user that's short from 3650 because of what the 21 said. So your plans are going to grow, right? And when it starts with that foundation, when you can look at your chart and you can identify momentum and know you have an advantage, and you can recognize tops and bottoms and know you have an advantage, well, then you can determine where that market is likely to continue, whether it's an area inside of favorable large triggers or whether it's a mid-band from a momentum style trade. And then all you have to do is just keep taking pictures of them until they become easy. And that's your path. Guys, I'm going to take a minute. I'm going to leave you with the S&P. Let's see if the 21 predicted it, or let's see if these large triggers are going to hold and things are going to continue up. I don't have any idea. That's the beauty of being me. I let the market do what the market does. I'll be back in just a few minutes. David, we'll start with yours when I get back. If you have questions, post them. Guys, I'd love for this last hour to be led by you. Post your charts, ask your questions. I'll be back in a few, and we will finish strong today. All right, guys, here we go. Last hour. Paul, the ES, is putting in a good top to break this fib and create a high probability trend trade short. Are you saying that this termination condition, should it create a full reversal and give you odds favorable momentum, will create an advantageous scenario for selling the market? If then, right? It might, and it might not. This support might hold, right? Because every trigger line is above it. However, Thala, remind me, what did your 21 say? 21 said giddy up to the downside, right? Termination condition adds fuel should this turn into a 50-50 trade, doesn't it? And we can use Fibonacci from a pattern that we recognize when a pivot comes from beyond an area back to the mid-band resistance. Doesn't it love to finish the move? Guys, if you're new to Fibonacci, to Nexgen, John Novak used to do this. I used to go long at that blue line. I'm going long because it's blue. And John would say something clever like, yep, and we're looking for the market to probably finish the move down to 41.20.03. And I thought he had a crystal ball. Oh, and it used to aggravate me. It's like, oh, you think you're so smart, John Novak. And it turns out that he was. Probably still is. But the one thing that John Novak did that a lot of people don't is John Novak takes 75 pictures a day. John Novak studies patterns every day. John Novak does market replay every day. John P., I'm 10 days back on my Renko charts. And if I'm running a market flow, I'm 5. There's so much tick data, you just don't need to go much further than that. Hey, Jer. Did not take those shorts from the smaller chart because it looked like a good bottom forming on the 21.3 with double divergence at an area, triggers rolling. Now, triple divergence, hard to go short. I hear you. So one thing that I see here, Joel, take care. And check this out. This was a good lesson for me. Hopefully it's a good lesson for you. So when all of your triggers get below these one-to-ones, the one-to-ones are broken, right? So doesn't it make sense that if all your triggers get below the divergence low, then it's broken as well? And it almost resets a little bit. It's good to be aware. Yeah, but then you get that second divergence. But it's not so much a pivot stop out because all your triggers got below. So if we look at the big chart scenario, we're in the mid bands, one-to-ones, all the triggers are below. Resistance, all the triggers are below. Support, all the triggers are below and the small are still just about below the large. So while I might be aware, for sure, remember that these are faster charts, and what happens in just a little bit on the 21.3 is in the moment. But what you're looking at says, okay, well, if I get a 50-50, well, then maybe I have to be aware, right? Because my 21 isn't perfect. Maybe I insist on no divergence. Maybe I insist on a tiny window of opportunity. And now we're coming right into that key pivot, aren't we? That you showed us on the 21. Boink. To the tick. So taking what Jer showed us, whoops, 2350 is a divergence low, but isn't this the same thing? So that same pattern that we talked about, isn't this a pivot from all the areas right back to a midband for potentially finishing the move as well? And we'll see what happens. This is how my brain works. What are my advantages? What are my disadvantages? I know 2350 is my lowest pivot, but it's bad bottoms on every chart that went back to the midband and resistance on every chart. Does that make sense, Jer? I like the look. And I think if nothing else, it keeps you cautious on the shorts, right? Makes you insist on things being a little bit better. I agree. I won't do it. No, it's okay. My plan isn't your plan. But didn't we have triple divergence here? And didn't that triple divergence break? Things break. And how awesome is that you get... and when did it break? It broke when the trigger lines got below. So right now, all you have on your 21, divergence, broken, pivot from nowhere with divergence, pulls right back to the midband resistance, and all the triggers remain below. I like looking backwards, but I also like living in the moment a little bit too. That was a lesson. That was a hard lesson for me. Because, Jer, I'm not going to lie, I was exactly 100% like you were. I was like, but there's triple divergence. And John Novak's like, but it broke. Or I'd say something like, but the area broke, John. He goes, yeah, but it unbroke. Now all the trigger lines are above it. So being in the moment for a little bit helps. And I love this look. Termination creates a full reversal, provides odds favorable. And if I'm going from the top of my trigger lines to the bottom of my trigger lines, and then I go from my lowest point of resistance to my highest point of resistance, there's my window of opportunity. So, based on a bad bottom to resistance that creates a full reversal, that gives me odds favorable momentum, it's 50-50. But that's a pretty cool target, isn't it? For a potential to continue to reach the next area. And it may not get us. But do you see how it's just chart reading? Over and over. What do I see? Where am I coming from? What are my advantages? What are my disadvantages? Do I have more disadvantages than advantages? Well, then maybe I stay out of the trade. But when my window of opportunity looks like a postage stamp coming from a termination with odds favorable, and right now, do you guys know how to determine if you have divergence potential? I just made that phrase up. So Paul, if you're looking at your 5-1, is there the potential for this pivot to show a loss of momentum? Do you guys know how to recognize that? See that negative number flashing on your 13-2? That's the potential for divergence. Your 5-1 is showing no potential for divergence right now. Which means that without the potential for divergence, and this divergence couldn't possibly be true until the third bar up. This had the potential for divergence on the way up. So I have no potential for divergence from a termination after a bad bottom with odds favorable, with everything going down, in the cutest little window of opportunity right at the bottom. If that fits your rules, that's a pretty good trade. Because really that's all you have, right? Rules met or rules not met? Does it fit your rules? If it doesn't fit your rules, are you going to go back and take pictures and see if it does later? Maybe you rewrite your rules. Maybe you rewrite your plan. If then, guys, all day, if this happens, my rules are met. If my rules are met, I am obligated to take a trade. Termination condition creates a full reversal. Full reversal creates odds favorable momentum. I'm on a 50-50 scenario with no divergence on a pullback to resistance inside of favorable large triggers. But look, well, my charts are jacked up. My synthetic is way up there. I need to rebuild my crude workspace. Does everybody know how to build charts? If you accidentally X out of your chart, watch this, ready? File, new chart. This is for 7. I'm going to take that crude oil and I'm going to use a dynamic Renko bar because that's what a 13.2 is. My body size is 13. I don't know what that means. That's John stuff. My new bar is 2. My days to load are 10. And I got to make sure that I have a template on there, right? 13.2 Renko. I'm going to click OK. And it's going to try and build it on this other screen. And now it looks pretty normal, doesn't it? How easy was that? So now I'm going to do it again. I'm going to get rid of this 5.1. And I'm going to hit my workspace new. And I'm going to build a new chart. And I'm going to do it on crude. And I'm going to do it a 5.1. Don't be afraid of trying to learn tech stuff, guys. There's a lot of problems that you can solve yourself with a little bit of practice. Click OK. Now it's building that next one. And is it just me? Or was that a pretty good looking 50-50 trade? With an awareness that my large triggers are still up there. No divergence, everything down, pull back to resistance inside of those triggers. 77? Oh, guys, and after you build new charts, when everything is all jacked up, make sure you go File, Workspace, and save it so that it won't be jacked up next time. Mike, I love that you just pop in and say good lesson. Paul, are you saying that you have rules met? Dang straight. There's no divergence on that 50-50. That window of opportunity is pretty small. Is anyone else like me? Do you take pictures of your rules being met? I love it, Mike. There's so many great lessons. If you need lessons on something, let me know. That's one thing I want you guys to realize is eventually this easy stuff stays easy and it doesn't take you any time to do it. But as you grow with the software and you're like, man, I want to learn more. I want to see this. Guys, come back to class. Let's talk about it. Because every time we go next level with you guys, I become a better trader. And it's really pretty selfish, but I like it. This is a picture I took. Guys, when I have a 50-50 trade, I love for my 5-1 to be perfect. No divergence, small window of opportunity. So much so that I took a picture of it. Oops, I did it again. I Britney Spears'd it. That's crude oil. There's the S&P. It looks pretty similar, doesn't it? I'm going to circle that tail. Whoops. I'm going to take a picture. Will you guys help me out with this? I could use a little class participation from my new kids. Do I have a termination condition that creates a full reversal? Do I have a strong top? Paul says yes. Thala, do you see it? Absolutely no trigger lines, breakthrough, resistance. Giddy up. Do I have odds favorable momentum? Small trigger lines below the large trigger lines. Large trigger lines are wide, angled in the direction of the trend. Absolutely, right? Everybody sees it? Not disputable. Price reached an area of support and absolutely no trigger lines broke through it. Do I have a clear path? What do you guys think? Do I have the advantage of a clear path? Or do I even have the advantage of an area with the potential to break? Phil says yes. You guys know sometimes I just have to set you up, right? Price reaches resistance, absolutely no trigger lines break through. I don't have a clear path. I have the potential for a clear break when the small triggers break through the area. So let's do this. I love this. Guys, this is how I had to learn termination conditions. True story. There's our bar right there. There's my area. Whoops. Do you see it? There's my small triggers above that area. So let me ask again. Do I have a clear path? So from a high probability or a medium probability standpoint, the answer is no. And if the answer is no, no matter what happens, I never get off the 13-2. I'm in a holding pattern. That's the high probability trend trade. That's that medium probability with the potential to break. So let's talk about the next level. If you have a termination condition that creates a full reversal that has everything cranking down with speed, all of your trigger lines roll, there's no divergence on the pullback. Thala, it's your trade. There's your momentum style entry with every chart agreeing with momentum. So maybe it's not a high probability trend trade, but guys, this is an opportunity. And it all stems around no divergence and a great top. Not a high probability trend trade, but it doesn't mean that it's not a trade, right? But you're not going to get this on day one or day two or day three. You're going to have to focus on those advantages, those disadvantages, and make an educated decision based on your chart reading. David did. I love David's charts. Shorts, lots of room, out at support. Looks like you may have jumped in a little late here and it pulled back and got you. Get in with momentum. Resistance is a great target. You went long again on the wrong side into a termination condition. It ate your lunch. Momentum after the area, out at the area. David, I think this is probably your best example on the chart here. Multiple divergences. And once again, you got those termination conditions. Things are kind of ugly all the way here. It's a 50-50 and a loss of momentum, which means that you're losing momentum, which means this is less likely to do its thing, which means at this point, waiting for one of those areas inside of favorable arch triggers becomes a little more advantageous. You know what? It's okay. And David, what you're going to find is you're going to take 5 steps forward and 1 step back because you have been very successful, right? Your reads have been great. You're going to start trying to push boundaries a little bit. That's what you did today. You tried to push boundaries a little bit. That's okay. That's human nature. If I can get away with a little bit today, I'm going to try and get away with a little bit more. This trade, David, was right here for you at 93 when you got below. By the time we come all the way to the 1-to-1 and that divergence potential's there, that quick hit is already gone. Does that make sense? Yeah, that's okay. Take a deep breath, dust off. Get back to what's making you successful. Everybody does it. Phil, you're telling yourself it's okay that you didn't get filled? Termination, 50-50, divergence prints. You're saying top of the window or no trade at all? That was crude, right? So Paul, you're now short crude on a 50-50 with divergence from the top of the window. Safia, have an amazing afternoon. Thank you so much for being here. And then that S&P trade, right? Didn't quite make it. That was close, wasn't it? Man, Phil, some days you're the boot, some days you're the butt. What if it comes back, though? How do you feel about that? Are your rules still met? Or is this trade done, gone forever? You know the difference between an amateur and an expert, when you're racing motorcycles at least, is that an amateur sits around and pines, oh, I didn't get filled, I'm so sad, this stinks, everybody's getting paid without me. The expert says, I have strong triggers, no termination conditions, small outside. Man, I hope this divergence is true so it pushes me to an area of resistance inside of favorable arch triggers. Totally different, right? Completely different thought process. You're either sad about what didn't happen or you're looking forward to what could. $50-50 with divergence. No, they don't. They do what they're trained to do. Alan, you said don't take it because of divergence. I like that. Alan, can I tell you what else I see? Now, like if you say no, I'm not going to, right? I don't know why I even gave you that option. So you have the divergence, right? So what are you saying? You're saying, this area is not broken. This area is not broken. This says there's a slowdown. And then did you check this out too? You ready? From the top of the triggers to the bottom of the triggers. My window of opportunity is that big. That's a pretty good one, isn't it? And silly me, I cut off the prices, but that's what, 76.94, probably all the way up to 77. I don't even know, 77.0102. So that's like 10 ticks right there, right? So you're 14 ticks of risk on a 50-50 with divergence. And Paul said, with that divergence and split triggers, I'm willing to take a shot from the upper end on that pull back to the synthetics. And it didn't work out. Still 50-50, right? Right now, Jer's like, you're damn right it ran you over. Oh no, that was ES, not this one. I love it. On the ES, using that range chart, pivot stop outs with divergence. It did its job though. It did its job. Tony, the 21 is strung up on crude. Right on. And guys, I don't let the 21 really determine a lot. Yeah, the first one worked, right? Because you still have all that momentum. That's your loss of momentum. And split triggers. What's the 21 look like? You said is rock star to the top side, huh, Tony? For me, it's just a matter of it's a 50-50 with divergence and split triggers. I can go right back. Does everybody have this picture? And everybody's plan is different, right? If this picture is in my plan, is that a trade that I would have taken? Not me. And then Tony, this is the 21. Let me open that thing up real quick. 21 says termination condition. 21 says termination condition creates a full reversal, creates odds favorable momentum. If nothing else, 76.52 is an area on the 21, which was that good bottom right there. That was your 21 midband. There was your pullback to the large triggers. See how we can do that? And guys, I'm not saying use the 21 to make all your decisions. But if you have a 50-50, let's do this again. Are you guys ready to have your mind blown? Here we go. If I have a 50-50, I know, right, Phil? If I have a 50-50 on the 13.2, don't I absolutely insist that it's perfect on the 5-1? Are you guys good with that correlation right now? If my large chart is a maybe, my small chart better be perfect. If my largest chart is a hell no, does it make sense to not have a perfect look on the 13.2? Do you see how you can incorporate? I'm not looking for the longs, but because I'm coming from a termination condition, because I have odds favorable momentum, because everything suggests that a bottom has been put in, it takes away looking for the potential short. And then when this one isn't perfect because it's 50-50, and then this one becomes even less perfect, I avoid. That's one way that I'll use the 21. Hypothetically, because I don't write your plan for you, what if you had a rule that said, if I take a 50-50 on the 13.2, the 21 should have odds favorable momentum and no terms. You'd sit out on a lot of trades, right? But maybe that's the most conservative approach. And then you work from that super conservative approach that's probably going to win more than it loses. And you start adding it. You start building from that. Guys, that's how plans are built. And I can't believe it's noon. Holy smokes, when did that happen? Great class today, guys. Great questions, great pictures. Thank you. Yesterday was like watching paint dry. So I appreciate you today. I appreciate all that. It is 45 degrees and the sun's starting to peek out today. I have a 1:30 tea time. I'm going to go see if I can break 100. Wish me luck. Guys, thank you for being here today. Thank you for posting. Thank you for your questions. And thank you for bringing them in from all levels of expertise. I think we got a lot of great lessons out of a lot of great pictures today. Let's do it again tomorrow. I'll be here at 9 a.m. And let's just keep moving forward until, I don't know, one of you guys buys me an island for Christmas. That's the plan. That's my plan. I'm going to write it down. I'm going to pull the Jim Carrey. I'm going to write myself a check for $10 million. Put it in a drawer. Good stuff. Guys, have an awesome afternoon. Be good. Enjoy the sun if you have it. I will see you in the morning. Take care, everybody.